Age 55 is considered a critical milestone in a Singaporean's property journey because it marks a major shift in how you can use your CPF savings and how banks view your mortgage eligibility. So, in this video, I'm going to discuss why 55 is the magic number and what should you do before hitting that milestone. First of all, let's discuss what will happen when you turn 55 years old. So, the first one, let's talk about CPF. So, CPF funds will be locked into retirement. When you turn 55, a retirement account is automatically created for you. Savings from your special accounts and also ordinary account are moved to RA to meet full retirement sum or FRS. And then once funds are moved to the RA, they generally cannot be used for property. To prevent this, you must apply to reserve OA funds at least 3 weeks before your 55th birthday if you plan to continue paying an existing mortgage or buy a new home. And then your CPF contribution rates also decrease at the age of 55, meaning less money flows into your ordinary account for future mortgage repayment. And then let's talk about CPF refunds after selling. If you sell your property after the age of 55, the rules for your cash proceeds change significantly. So when you sell, the CPF you use plus accrued interest must be refunded to your CPF account. If you haven't met your FRS, these refunds are used to top up your RA first. And then regarding cash shortfall, you might receive very little or zero cash from a sale because the money is diverted to your RA to secure your retirement payouts through CPF Life. There are some special exemptions and schemes. So conversely, age 55 also unlocks some downsizing benefits. So for example, private property owners age 55 and above are exempted from the 15-month wait-out period if they are moving to a 4-room or smaller resale HDB flat. And then seniors who right-size to a 3-room or smaller HDB flat may be eligible for a cash bonus up to $30,000 if they top up their RA. And then only those age 55 and above can buy short lease 2-room flexi flats where the lease ranges from 15 to 45 years, which are significantly cheaper than the standard 99-year leasehold flats. Now, related to mortgage and loan restrictions, your age directly affects your borrowing power due to regulatory limits on loan tenor and also loan to value or LTV ratios. Most banks cap the loan period at the age of 65 or 75. At the age of 55, you may only get 10 to 20 years of tenor, which leads to much higher monthly repayments. If your loan tenor extends beyond the age of 65, your LTV or the amount you can borrow drops from 75% to 55%. This means you need a much larger cash or CPF down payment. For example, 45% instead of the usual 25%. To make it clearer, let's discuss using an example. Let's say you want to buy a $1 million private property, and let's assume that the market interest rate is 3.5%. So as you can see on the table here, let's say in scenario A, if you are 50 years old, then your maximum loan to value is 75%, which means that your minimum down payment is 25%. And then let's say you can get max loan tenor of 25 years up to the age of 75, and then this is the amount of your monthly repayment. But then let's say you're already at the age of 55, so your maximum loan to value amount actually dropped. As you can see, I put here 55%, and then this actually means that your minimum down payment increased from 25% to 45%. The max loan tenor itself also drops, let's say here to 20 years because we are assuming until the age of 75. Now, indeed, you are seeing a lower monthly repayment, but again, remember that you need to cough up down payment even higher versus when you are under 55 years old. So that's the watch out. So now let's discuss what should you do before turning 55. I would say that before reaching the age of 55, the primary goal should be to maximize your financial flexibility before CPF rules tighten and your borrowing power decreases. First of all, I would suggest to actively manage your CPF OA savings. Reserve OA for future housing. So if you plan to buy a property or keep paying an existing mortgage after 55, you can apply to reserve your OA savings within 6 months before your 55th birthday. This prevents these funds from being automatically transferred to your retirement account. Ensure you submit this application at least 5 working days before your 55th birthday. And then you can also do voluntary housing refunds if you have spare cash. This reduces the accrued interest you owe to yourself, leading to higher cash proceeds when you eventually sell the property. And then another thing that you can do is to lock in long tenor mortgages. Because banks cap loan tenors often at age 65 or 75, taking a loan at the age of 50 gives you more years to spread out repayments compared to taking one at the age of 55. By buying before 55, you are more likely to qualify for the maximum loan-to-value ratio of 75%. If you wait too long, then your loan tenor exceeds age 65 and your LTV could drop to 55%, requiring a much larger 45% down payment. And then another thing that you need to carefully think is about portfolio restructuring and also right sizing. If your goal is to upgrade, let's say from HDB to private, doing so well before 55 allows you to leverage a longer loan tenor and use more of your OA before it's locked into the RA. And then if you own a private property and intend to move to a 5-room or larger resale HDB flat, you must serve a 15-month wait-out period after selling your private home. Many choose to complete this transition before 55 to avoid high rental costs during the wait time or to ensure they can still use their CPF for the purchase. And then you can also take defensive positioning. As you approach 55, consider trading up to a younger property with better capital appreciation potential or a property that you can eventually downsize from to unlock cash for retirement. And then another thing you need to consider is to maintain financial prudence and also leverage yourself. I would recommend to retain at least $20,000 in your OA. This acts as an emergency fund to cover mortgage installments if you lose your income suddenly. Another thing you can do is to use planning tools. Use official calculators like the CPF Home Purchase Planner or the HDB Budget Calculator to see how your property choices today will impact your retirement payouts later. Okay, now let's summarize and discuss what are the key financial takeaways. I think number one to take away is that the entry bar jumps significantly. By waiting until 55, you need an extra, let's say $200,000 in cash or CPF upfront for the same property, assuming the example that we use, which is a property of $1 million. But as you know, in reality, if you want a condo, right, you can't get at that price anymore unless it's like a small studio. So you need to prepare as soon as possible. This is often the biggest hurdle as your CPF ordinary account savings are also being diverted to your retirement account at this age. Another takeaway is that lower repayments but higher stress. While the monthly payment is lower at age 55, it is only because you are borrowing less money. If you try to borrow same amount at the age of 55, your monthly repayment would spike higher because of the shorter tenure lease, likely clashing with total debt servicing ratio limits as well. And then don't forget that CPF contribution also changes. At the age of 50, your employer and employee CPF contribution rates are still at the maximum, but from the age of 55, these rates begin to taper down, meaning you will have less new CPF OA funds each month to help cover your house installments. While we are talking about this topic, there are actually 8 HDB mistakes that people often make when they turn 55. Check out my other video to know what they are and how to prevent it, exclusive for members only. Thank you so much for watching and I'll see you in my next video. Bye bye! To support my work, you can give a one-time tip by pressing the thanks button, pick the amount that you want, and click buy and send. Or you can also press the join button for exclusive contents and monthly membership. Your support means a lot to keep us independent. Thanks for watching and I'll see you in my next video. Bye bye!